All right, welcome to section 11, also a critically important section. Here we're going to be talking about trading psychology and how important it is to make sure your psychology is on point. So if you ever heard anything about trading or have already started your trading journey, you know just how much of an impact your psychology can have on the profitability of your trading. I smile and I laugh about this because even now, after doing this for 4 years and having all these back testing strategies and edges that I think I've developed, I still struggle with my trading psychology. It's the mental and emotional state of a trader that can truly have influential decision making aspects on your trading that can lead to not only irrational but also detrimental trading behaviors if you can't manage your trading psychology properly. Let's get into it. The impact on the psychology for trading. So, there's the emotional impact. Trading psychology can significantly impact your trading outcomes. Emotions like fear, greed, hope can cloud your judgment and they can lead to impulsive and reckless decisions. It's crucial to recognize and manage these emotions when you're making trading choices. Strategy execution. Emotions can disrupt even the most well designed trading strategies. You might have the most proven edge of all time, the best strategy in the world, but if you have fear or anger or some type of anxiety, that can lead to a lot of negative aspects with your trading. It can lead to premature exits with fear. Greed can cause overexposure where you might be going into drawdown and thinking it's going to bounce back. Then it keeps going away into drawdown, and next thing you know, your loss went from 1x to 2x. Maintaining an emotional discipline is essential for your trading strategy to be consistent when trying to execute profitable trades. Now, financial outcomes. Well, obviously, we trade to make money. So if your goal is to make money and all of a sudden you're losing money, man, that's going to have an impact on your trading psychology. So uncontrolled emotions can lead to multiple losses, while disciplined trading can contribute much more to a long-term profitability route when you're trading. Mastering trading psychology is crucial for having financial success. One of the most common things, and I have this as well, it's kind of this weird oxymoron that happens with trading. We're hopeful during drawdowns and we're scared during profits. So we all of a sudden have this hope during drawdowns that thinks, oh, I'm in a drawdown, I'm losing. I'm going to hope and hope and hope it turns around. I think it's going to turn around. It's a loser right now. I'm not going to kill the loser. I'm going to hope that it turns to a winner because I have seen before that it goes to a winner. Right? Sometimes I close out the trade earlier, my stop loss is too tight, and that's right when it bounces up. Your strategy should reflect where your stop loss should be. But this hopefulness during drawdowns is lethal. That's why, as you saw, I said in a previous section, I will only put a trade on where I have a stop loss on. And I never move my stop loss further away to give myself quote unquote more cushion, because more times than not that cushion gets used. I will only move my stop loss to break even or trail if I'm in profits. So don't let losers become bigger losers. If you don't have proper risk management, and we had a whole section on this, that trade can become a bigger and bigger loss. Have a plan in place, manage your risk, and avoid letting emotions cloud your judgment. Your stop loss gets hit, gets hit. You live to trade another day if your risk management is set correctly. The other big one, and it's funny because my trading career, I've experienced both of these in waves. When I first started out, it was more so the hopefulness and drawdowns. And then as I got going and my strategy, I'd proven to myself statistically that I had an edge, at least over a certain period of time with trading strategies, that this trade should be profitable. Next thing I know, I'd be into profits and I'd be 10 ticks away, 20 ticks away from my final take profit, or at least my initial take profit, whatever you want to call it. And I would literally get profit anxiety. And that's basically where you get worried about the slightest pullback and you close out your trade early, causing you to miss the eventual bigger move. This makes your profits smaller and makes your losses bigger over time, which is a non-successful strategy for winning trades. I do that more than you know, even now. I had a perfect example today. I had a target profit for one of my trades at 60 ticks profit. It got to 53 times and reject and reject and reject. I said, all right, next time it gets to 50, putting my profit there, I'm taking some risk off the table. Now, it was my first scale out, so it wasn't like the biggest no-no. But right when I put it at 50, it's almost like the market maker said, we gotcha. Boom, went and tapped my 50, shot right up to the 60, literally 30 seconds later. So I missed out on money there. Now, ended up still being a long-term profitable trade. But anyways, that anxiety during profits is real. It is very real. So you have the whole hopefulness in drawdowns and anxiety during profits. This whole anxiety comes from a fear of loss. You don't want to lose profits you've already made. When you're looking at your account and you're seeing your P&L is floating up 200, 300, 400, and you don't all of a sudden see it go above 400, and it starts to come back down to 300, and it starts to come back down to 200, you go, wow, I can't let this trade turn to a loser. So you don't, but you might just say, okay, instead of it letting be a break even or sticking to my strategy, if that's what your strategy involves, not moving your stop loss to break even until you get to TP1, you got to stick to your rules. This type of fear of loss can lead to massive impulsive decisions. That lack of patience will cost you money in the long run. The other one, I'm also a culprit of this too, overthinking. You might be in a trade and you're looking at the charts, especially on lower time frames. Like you're trading on the 5 minute, and you're looking at those little 1 minute candles, and you're just not seeing it go in the direction you want it. Just keep stopping and can't push through. Keep stopping, push through. You start to second guess your decisions. You're second guessing your strategy, and basically it leads to this lack of confidence. And you may make a decision that's irrational that either costs you money or it doesn't allow you to get to the full take profit that you should have gotten to. The overthinking is crucial to avoid. So this all still stems back to go get a strategy that you've proven works, that you can tell yourself to your face. I do this every day. That's why I have this stupid picture frame here. I've showed you guys this several times. Be the bot, be the bot, be the bot. What I mean by that is trade as though you're a bot. I'm a bot. Here's my setups. When I see this setup, I trade, take profits go on, stop loss goes on. I'm in. Let the market do its thing. I'm hands up. I don't touch my mouse. I don't go to different time frames. I'm not putting on random new, trend lines on my chart, Fibonacci, saying, if it can hold this, it holds that. I'm in the trade. Trade either wins, trade either loses. Hands off. So I try to do my best, and I still do it. I still overthink. I still get profit anxiety. I still get hopefulness and drawdown. It's just things you have to learn to acknowledge and try to overcome. I don't think anyone will ever be able to do it perfectly. It's almost impossible, but you can start to improve and improve and improve upon it, and it'll make you a better trader overall. Fear of missing out. This is a lethal one. So this happens not so much to me as much anymore because I have a set rules of criteria for when I enter and why. So, but fear of missing out is a big one. It's a very, very common issue among traders. Charts are moving, you see it pumping, you see it dumping, it's moving fast, and you don't want to miss out. So instead of waiting for candle close or instead of waiting for confirmation of a break of price or your initial price target for entry, you decide to just jump in the market because you're going to hope it's going to continue. And almost immediately, as soon as you hit buy market or sell market, whatever it is, boom, it stops, like on the dot. And then it reverses and goes and hits your stop loss. That happens almost comically more times than it should. It's obscene. So don't have a fear of missing out. I like to trade once candle closes. So I have a very set of rules. Trade on the 5 minute. Here's my confluences. My confluencers are aligned. Okay, as soon as this candle closes, boom, I'm in. No questions asked. I'm in. That way I don't have the fear of missing out. Now, are there times where I'm anticipating a sell coming and all of a sudden it dumps? Yes. Am I going to get in before the candle closes? No. As much as I think it's going to continue to dump, as much as I think it's going to continue to go down, I have to stick to my rules, as should you. So fear of missing out is massive. The other big one is avoidable losses. This can very much lead to really what I call like mistime entries. So like I had before I was the bot, don't know a lot, be the bot, trade the bot. I used to literally say, okay, once this candle closes, this is when I normally take a trade. Now at the time, 2 years ago, 3 years ago, whatever it was, my stop loss was really tight because I was going for like 1 to 5s. And I was like, okay, my stop loss, I'm going to keep it at 1 to 5 so I can have more bullets. This is before I did like algorithmic back testing and all that. I would I would get stopped out. And sometimes I'd start my day off with 3 losses. And that's like a horrible way to start your trading day. It always sucks to start off with losses. So then what I would start doing is I would second guess my entry. So instead of getting in right at the close, I would wait. And I would see it kind of reverse from the way I wanted it to go. And I'd be like, oh, okay. And there's a couple times where I've saved myself from losses for sure. But there's also been a lot of times where I decided not to enter when I was supposed to. I waited until it continued the certain direction that I wanted it to go. And then by the time I enter, not that it was too late, but now my stop loss was so tight, it just has to retrace a little bit more than where I would have wanted to, and I'm out. So that can be an issue for basically poorly timing your entries. The other issue is that you don't have to be in every trade. So for me, I used to struggle with over trading for sure. It would be if I was down 3 or 4 trades, I'd want to get it back. Or if I was up 3 or 4 trades, oh man, let me see how much higher I can get this to go. So sometimes you have to have a stop point and just know, hey, I got to stop for the day. Give myself more bullets, live to fight another day. The other scenario is even if a trade comes up and you're not just completely confident in the trade because this isn't an A+ setup, this is a B setup or a C setup, you might go through and say, okay, I'm not super confident in this. I'm not super confident in the direction that this is going. Sorry, guys. I'm not super confident in the direction that this is going. So what I'm going to do is I'm just going to stand on the sidelines and wait and see. And I'll still track it. I'll still chart it. And I'll still see where it got to. And I'll still log it. Not as a trade that I took, but just to see what the results were. So I have the data. And therefore, if you don't trade, you don't risk losing. Now you don't have the opportunity of winning and making money, but you don't risk losing money. So sometimes you can avoid losses by just being patient until you're really dead set clear in your strategy. Now for me, I used to try to avoid losses because I try to be more hesitant. But when my setups would come, I'd be too scared to take them because I didn't want to lose. I only wanted to win, right? Who wants to lose? No one does. But if you don't take the shots, you're never going to have the chance to make them. So there's kind of like a fine balance with that one. So fear of missing out, impulse behavior, hopping in, those are worse. Avoidable losses, with a proper strategy and execution and proven edge, that one you can slim down on pretty quick. All right, here's a nice, this is my little AI art. You guys, none of these guys ever have eyes. It's so funny AI can never do that. But mastering trading psychology, constant evolution. This is an ongoing battle here. You're never going to be perfect. You're always going to have the option to get worse or get better, and it just depends on which route you decide to go. Basically, it's a self-improvement battle. You got to constantly be striving to manage your emotions, and you got to make better decisions. Trading psychology is literally going to be something that comes in challenges in different ways. First, you struggle with this, then you start to get better at that. But then you start to struggle with this, and you get better at that. As long as you're self-aware and focused on trying to constantly improve your trading psychology, that whole thing of get a little bit better each day, you're going to start to see those improvements, right? The whole kick the can theory. You don't have to kick the can a whole mile, but if every step you take, you kick that can, you'll be surprised at how far that can goes after a couple steps. All right? Now, mastering trading psychology. This is a wordy slide. So it really involves 3 major aspects, in my opinion. And we're going to get to some of the books and videos that I recommend and some of the other aspects that I personally have used myself to improve my trading psychology. I definitely cannot say I'm a master of trading psychology. But it really involves understanding and truly managing your emotions, your biases, trying to understand your thought patterns in order to help you make better. It has a bunch of different pitfalls that you can avoid by managing your psychology, such as overtrading, chasing losses, letting fear and greed dictate your actions. It's truly about developing a mindset that allows you to approach trading with an objectivity and long-term perspective. So for me, I sort of boiled trading down into sort of 3 crucial pillars that build this pretty little pyramid that we see here of trading psychology and mastering it. First is education. Education plays a massive role in building a strong foundation on trading psychology. Education could be things like reading books. It could be watching YouTube videos. It could be listening to podcasts. It could be watching TED Talks. There's so much education out there about trading psychology. You need to try to take as much of it in, not in one big, huge gulp, but little bits at a time, and then apply what you learn to yourself and your trading psychology. Next is experience. You can't really buy experience for yourself. You have to go through it. You have to be trading a paper account, then you have to be trading an audition account. And you have to go through those ups and downs of dealing with those psychological factors of being hopeful in drawdown, being fearful when in profits, fear of missing out and not trying to jump on a train when it's moving 10,000 miles an hour. It just seems like it's just rocketing to the sky and you want to get on it. And then last one is discipline. Making sure you have the discipline to consistently apply what you've learned and what you've experienced to your trading on a daily basis is key. By understanding these different principles of trading psychology, you can develop a more effective and profitable trading approach. This involves learning different psychological biases, developing strategies for managing emotions, practicing self-awareness to identify your own trading patterns and weaknesses. The more you learn and practice, the better equipped you get to navigate the emotional challenges of trading. So that big, huge, nice, fluffy sentence, to me, backtest, get a strategy that you feel confident in. That'll help with your confidence with your trading and your discipline with trading. 2, when you start to trade, I keep this by my desk. I see it every day. Be the bot, don't know a lot. What I mean by don't know a lot is I don't know what's going to happen in the markets. But when the markets give me the signals to take my trade, I'm going to be the bot and I'm going to take it unemotionally and I'm not going to mess with it after that. Right? I'm in the trade. Whatever happens, happens. And education. Right? I'm constantly, all my social media feeds is trading related, trading based, trading psychology. I'm obsessed with it. I'm fully devoted to it. This is what I do. Videos on YouTube are all trading based. All my, check these videos out, explore, whatever. It's all trading based. So I'm constantly trying to learn. There's so many people who are on these trading journeys that have their own individual unique experiences that you can learn from. So educate yourself, get the experience, apply the disciplines that you learn from learning and practice. Okay, books. So I kind of have 3 big ways that I recommend improving your trading psychology. Obviously, the education. Reading. Books on trading psychology can provide incredible insight for managing your emotions and improving your decision making. And I'm personally, and I'll admit this, I'm not a big reader. I don't like to read. But when things that I read have an impact on my results, especially my financial results, I read. So these 5 books, there's plenty of them out there. These 5 books are like what I consider to be the holy grail of trading psychology books that everyone should read. Okay, it's important that you understand that trading psychology is an ongoing process. And the number 1 book that you see on here, Trading in the Zone by Mark Douglas, you'll see everyone and their mothers who are traders talks about this book. That to me is the Bible, the Quran, the whatever script, the holy script, whatever you want to call it, for psychology and trading. Okay, you read Trading in the Zone. I bought it. I actually found a copy that I downloaded, and I try to read or at least go through my highlighted notes. Okay, I'm not gonna honestly sit here and say I read every single word for word every month, but I try to go through my notes, my highlighted notes, at least once a month, just to kind of reset. Hey, month's over. Let's get back in the game. These other books are great. Best Loser Wins by Tom Hugard, Market Mind Games by Dennis Shaw, The Daily Trading Coach by Dr. Brett Steenbarger, Trading for a Living by Dr. Alexander Elder. Those are all great books. If you had to start with one, Trading in the Zone, Mark Douglas. Okay. There's helpful videos as well on YouTube. So let's see if I think I put the links in here. It might be in the PDF. No. Okay. So when you go on YouTube, you can just search these, Trading in the Zone. It explains kind of like the Spark Notes or the summary notes. For, if you don't know what Spark Notes is, you're definitely younger than me, but it's like the short and abbreviated notes for Trading in the Zone. Still, videos are great. Reading is going to be a lot more dense, take more time, but it's going to stick better in my opinion. But Trading in the Zone explains the key concepts, covers topics like risk management, emotional control, and developing a winning mindset. Best Loser Wins, obviously in book form, can get it in a video. It's basically his insights on managing losses and the psychology around it. He emphasizes the importance of accepting losses as part of the trading process and developing a resilient mindset. You hear a lot of people say this phrase, right? Losses is the cost of doing business and trading. If everyone wins all the time, no markets, doesn't work. With every winner, there's a loser. So you have to understand that you're going to take losses. You got to accept those losses. Great book. Video's pretty good. Book's better. Market Mind Games. Dennis Shawley discusses all the psychological aspects of trading. She explores how emotions can impact trading decisions and provides strategies for managing them effectively. And by the way, I tried to put these in order of, top 1 to 4. No shot at Dennis Shaw or Dr. Brett Steenbarger, but Trading in the Zone, Best Loser Wins, top 2 for sure. Steenbarger's Trading Psychology talks about topics like developing a trading plan, managing your stress, and how you can build confidence. All great videos. Now, backtesting strategy. So we've talked about reading, talked about watching. This is the experience aspect, right? We want to talk about how we can build strategies and confidence in our strategies. That can only be done by backtesting. You can go watch all the videos in the world on YouTube. You can see all these other people's results and saying, this is a strategy that did this for me. This is a strategy this for me. Yeah, I did that. I still do that. I still watch to see what other people are doing to make it work, right? Because no one strategy is the ultimate all end all be all, right? You want to learn what other people are doing and maybe be able to apply it to your own. But you have to backtest it yourself. It involves testing your strategy on historical data to see how it would have performed in the past. You can then see how it does, and if it does well, that gives you confidence in applying those strategies in real time. It's an extremely important and crucial process in your trading journey to backtest. Helps you identify potential flaws in your strategy, and it can also help you to make necessary adjustments before risking real money. So you might see someone who's doing, a breakout strategy. I won't name names, but there's a guy who does a breakout strategy specifically on the Dow. 30 tick stop loss, and then he does increments of 30, 60, 90, 120, 150 for his up through level TP5 take profits. Well, if you go take that exact strategy and try to do it algorithmically. Now, he's got more experience because he's spent a lot of time and years on the markets, and he does it well. I'm not knocking him. I'm just saying for someone trying to follow that, if you go take those exact parameters, those exact data sets, and kind of really look at how he creates his breakout ranges, using the stop loss that he uses over time, at least over the past 3 years, it's not a profitable strategy, at least consistently profitable. Yeah, there's weeks where it does well. And who knows, if he takes losses, he might double up on size, he might martingale, who knows. But if you take that same strategy and adjust the take profits and stop losses, instead of having 5 take profits, you can go to 2 take profits, and you adjust the stop loss to be a different size and allow yourself one reentry, that sort of tweaking, that's a strategy that I found that actually works. Now, it's different than what he teaches and preaches, but its base root concepts are the same. The fundamentals are somewhat the same. It's just tweaking the take profit levels, stop loss levels, and allowing yourself a reentry. Not martingaling, same size, but based on the risk reward with that, if the first trade loses and the second one wins, you're profitable across both of them. Okay? Confidence. Confidence is going to instill a better psychology. A better psychology is going to create better results. So as you can see, it all connects together. Backtest, prove the results on backtesting. Proven results gives you confidence. Confidence gives you the ability to trade. Ability to trade gives you the ability to make money. It seems like it's so easy. So my experience of backtesting, I sort of hit on this. I have paid for dozens of courses. I've watched pretty much all of the videos on YouTube. Probably not. That's just me being exaggerative, but I've watched a lot. I've subscribed for dozens of Telegram signal groups, Discord signal groups, and I've even paid for much lower tier trading bots. And initially, I just blindly trusted them, and that deeply impacted my results in a negative way, both from a financial and psychological. Because I kept on seeing these guys who I was buying the signals from or watching the videos from, hey, they're having all this success. It's not working for me. Why? Well, I never backtested. I just trusted it blindly. So when I wasn't getting those great results, I was thrown off like, oh, everyone's a liar. Everything's a sham. Well, once I started to dive into why those bots would take those trades or why they set those signals out, what were they looking for? What created those, triggers that told them to tell us to sell or buy? What were they saying in the Discord groups? You start to learn the strategy behind the signals. Then you can start to see things that work and things that don't work. And then I started to basically create my own set of different strategies. I had 15 different strategies at one point that I manually wrote down all of the specific rules and criteria for entries and exits. And I started to backtest these strategies literally day by day by day with different settings. So I'd take one strategy and I'd say, all right, I'm going to go try this over just a 1 month period. But I'm going to change the criteria for entry. Have variations for entry criteria that change. Have variations for stop loss ranges. Have variations for take profit ranges. Put it onto an Excel sheet. Mind numbing, not fun, not profitable work, at least initially. But you had to get through that, or I had to get through that in order to basically hone in on the strategies that I found that worked. And that was a huge, huge, massive turning point for me. Okay, so how do we test strategies? Well, like I said, I tested them one at a time on one instrument that I wanted to trade on one time frame over the course of an entire trading year. Now, let me be, fully transparent here. I would start with a month and I would see how that strategy would do for the month. Okay. And then after the month, if it did well, I'd log that and say, okay, this strategy did well for this month. That goes to this section. And I'd work my way through these different strategies. And I ran a bunch of variations, right? Price based, candle close based, break and retest based, bunch of them. And then I finally started to hone in, okay, what sort of variations consistently do well? Then you continuously tweak. I mean, like moving little things here, tweaking that there. EMA 9, EMA 15, MACD this, MACD that, RSI this, RSI that. Risk reward, 1 to 1, 1 to 2, 1 to 3. How does everything play out? I also tested different combinations of trailing stop losses with either trailing stop losses on, trailing stop losses off. Break even move to stop loss, no break even move, let it run. This basically would allow me to see how these different parameters would affect the performance of each strategy. Now, I was doing this manually, keep in mind. Right? There's softwares now out there that can help you do this a lot faster. And I go over that in my premium course, hey, who I use to build a coding bot, especially for futures. I've got a great resource. And how I use that bot to then go back test strategies with NinjaTrader to make sure that my manual backtesting aligns at least closely or very closely to what the NinjaTrader backtest is telling me. There's also MetaTrader backtesting. Obviously, that's very much more straightforward. But I would use this data to test all these different strategies and see which perform the best. And then, using some of the strategies, I teach this in the premium course, but you can look up these videos. There's other stuff on it. But I show you how I go into tools like NinjaTrader or MetaTrader, and I optimize for certain results. Do I optimize for max net profit ratio, max overall net profit, least cumulative drawdown? There's all these different things that you can test and optimize for. And then you can kind of find your equal balance harmony that gets you to a point that says, okay, this is the setup. These are the exact entry criteria. These are the exact stop losses, exact take profits, trailing stops, break evens, times of days, time frame I want to trade on. And you'll be amazed at how small little tweaks, stop loss going up or down by 5 ticks can drastically impact the performance of a trade. So obviously that sort of makes sense. But anyways, you get that data and that helps you refine your strategy. Now, when you have a finalized strategy, or you think you have a finalized strategy, you're going to basically be able to quickly clear and rule out other variations, right? Narrow it down. That's your goal. Finally, what I ended up doing is I found 5 strategies that worked very consistently for me, some more consistent than others, so I adjust my risk based on those, but some more consistent than others that were very clear and easy for me to follow. And what I mean by easy to follow means if I had to code this into a bot, it wouldn't be hard to explain this to a developer and have them code it in. I wasn't using a bunch of crazy intricate software. I wasn't using, third-party signal rooms, and if they said this and I do that. It was just very clear strategies that I teach, right? In the premium course, you learn my exact strategies that I use. And I also teach what risk I'm putting on for those strategies, especially for funded accounts or auditions. And then once I knew that those strategies had a profitable edge, at least over the last year on that specific time frame for backtesting, I then not only had the confidence to trade it, but then my psychology drastically changed when I was in those trades live. Because now there's real money on the line, right? If I can go past this audition, or if I'm now funded. Now I know, hey, there's real money here. If I go grow this trade hits, I make, $500, $600. Well, you times that over 20 accounts in a day, it adds up pretty quick. So once I have those profitable edges, now I have the confidence to go put those trades on. And if they win, they win, right? Hey, that's the edge. It shouldn't be a surprise. If they lose, they lose. Hey, it's part of the edge. I shouldn't be surprised. So my psychology became much more consistently good than consistently bad after I went through not only the video and reading education, the experience of trading on the charts, the back testing of finalizing a strategy and finding my profitable edge, but also that whole culmination all together, and then obviously seeing the results play out on a real auditions and funded account. So the route that I took, once I found a proven edge, I didn't just go hop into an audition. I didn't just go put real money on the line. I took a demo account, they had plenty of free ones out there, and I traded on the demo account for 2 weeks, which most people is going to say is nowhere near enough time. But the way I looked at it, I said, well, I've technically proven to myself that I have strategically been profitable for the last year, full 12 months of trading, right? There's a lot of market action going on over 12 months. So over the last month, this strategy or these 5 strategies have all proven to consistently make some type of profit over time. So therefore, if I was able to go trade it for 2 weeks and they were profitable after 2 weeks, I felt confident enough to then go take it to the next level. But with those 2 weeks, everything was clearly defined. My risk reward was defined, my targets were defined, and every single trade, I didn't use TradeZilla, which is a great platform, by the way, but I just used an Excel sheet. That worked for me. So I used the Excel sheet, I logged everything, and I kept basically doing a weekly summary and daily summary. Here's the trades I took. Here's why I took it. Here's what happened. Do I know why this happened, or what's my instinct or reasoning for why this hit a stop loss or take profit? Could I have closed out? Could I have done this early? Should I have done that? I put all that on there and I try to assess it. And more times than not, my winners weren't big enough because I didn't let them go all the way up. I got too scared, right? Fear, profit fear. And then my losers would become bigger because I would, try to, this thing hit 20 and I've seen before if I go 30 ticks, it can usually give me a bounce back. Maybe I'll let this one run. So basically what I ended up learning was don't touch it. You have your settings, you have your parameters, you have your entry criteria, exit criteria. Once it's on, it's on. Be the bot, don't know a lot, let it run. So 2 weeks is 10 trading days, right? Just to make sure that's all clear for everyone, right? 5 trading days, Monday through Friday, 2 weeks. In that 2 weeks of trading with the 5 different strategies all running, each of them basically combined overall to be profitable. But I did have 1 losing day and the other 9 were profitable. Now, some were, slightly above zero. Some were, pretty decent. But that gave me enough confidence that said, hey, I back tested this for over a year, both manually and, software algorithmically. So that confidence check mark is there for me. Now I ran it for 2 weeks just to see, hey, sometimes these softwares glitch out. You can see AI, won't give a human eyeballs, but get everything else right for the most part. So I was like, all right, 2 weeks, that's enough confidence. So then I said, all right, well, I'm not going to go risk the biscuit. I'm not going to go put 100,000 down. And, I didn't have 100,000. I'm not going to go put 1,000 down into my own account and try to go see if I can make this thing go. So at that time, I was trading Top Step or interested in Top Step. One of the people that I was following at the time, like Top Step, preached Top Step. So, hey, I went with them. I trade Apex now. I like the fact that you can get more accounts with them, which I think is only worth it once you think you're a confident and profitable trader. So I got a Top Step Futures audition, 150K. Basically passed that audition in, technically it says 2 weeks. It was a little bit more. I was 12 trading days. Only risking 300 per trade. Never hit the daily drawdown. Never had any issues with the consistency. It was a good, clean, I wouldn't call it luck, but during that period of time, those strategies were very consistent. They hit right across the board. And I hit my $9,000 profit, which is what you need to get with a 150K account, at least at that time, risking only $300 per trade. And Keep in mind, risk 300 for the most part. I'm making roughly around 600 to 650 per trade. So it doesn't take too many winning days or winning trades to get to 9,000 at that size. A little bit bigger than I probably should have done, but 150K account Top Step was, I think, $150 at the time. So that was worth the time and effort for me to take there. So I had the confidence. I'd watched the videos. I'd had the strategies. Let's do it. You can only dilly-dally for so long. But yeah, that was my first past account. Now, I got to the past account thinking, okay, before I get to the summary of key takeaways, just to put this into perspective, on my first funded futures account, I got funded with Forex before using bots and things like that. But the bots, 50-50s up and downs. I'll get to that later. That was my first funded futures account. And I got that account up to about 6,000 in profit on the funded account. And my goal is to get to 10K profit. And I ended up blowing that account almost a week after getting to the 6K because my trading psychology got messed up. I got up to 6,000. Then I had a bad day, 5,000. Okay, I got to get back to 6. Ooh, bad day, 4,000. Now I was like, all right, I'm going to increase my size like an absolute idiot, not following my rules. And I started revenge trading. Because I'd lose. Okay, I lost double size. Dang, I lost 600. I got to go get that back. And I just went down this tornado. It's like a spiral. Right down to busted account. So after that, I assessed. And then I decided to go over to Apex just because they were having a crazy deal, 90% off. I think they always do like 80% off, but 90% off, 250K accounts, 20 of them. And I failed the first two because I didn't fully grasp their trailing drawdown aspect. And then the third session around, after 2 full resets, which, at the time I think it was like $30 per account. So, $600-700. I think it was 35. I finally passed, and I've been basically gotten 2 decent, close to about, first one was about 40,000 payout. I only did 2K. And then next one was about 60K payout. And now we're looking, hopefully, roughly about 40 to 60 is going to be my range. So I got a request coming up in a couple of weeks. Fingers crossed. Let's go. But anyways, summary of key takeaways. Learn from books and videos. Gain knowledge from books and videos. There's so much information out there. There's people who've been doing this before you that have learned. Learn from them. Don't try to reinvent the wheel. You want to combine this knowledge with strategies that have a proven statistical edge, and you're going to improve your confidence in your trading when entering and exiting those trades. Get yourself a proven statistical edge. I know that sounds like I'm saying it like it's easier than it is. I know it's hard. My premium course, I try to give you a shortcut to that. If you want to learn my strategies, great. I'm happy to teach them. I don't teach them for free because I put 4 years of my life and a ridiculous amount of money to get to that point. Okay, so I'm just basically almost starting to get, back to above break even for my time and amount invested into this trading career so far. But I've spent a lot of time getting to where I'm at. And there's other guys who have trading strategies that are different than mine. So you might find their strategies might suit your needs better. Or you learn from different people like I did. You take the pieces of the puzzle and you create your own mosaic that works for you. But once you have that proven edge, especially from manually back testing and even algorithmically back testing, Jesus, what words, it's going to change your confidence like crazy. And by understanding and continuously improving your trading psychology, you can get better at managing your emotions. You'll get better at sticking to your trading plan, and you're going to achieve greater consistency and success in your trading endeavors. So that was a lot of density in that section, people. But I hope you took a lot from it. Watch those YouTube videos. Ignore my dog barking in the background. Read those books. Back test. Get your edge. Get your confidence. Get your emotions in check. Start trading. Be the bot. Don't know a lot. All right? I got to put that on a t-shirt or something. Maybe get a tattoo. All right, guys. Well, I hope you enjoyed that section. I'll see you in the next one. Cheers.